Hello. Today's video is going to be a bit different. No charts, no algorithms, none of the typical accoutrements that I usually use. Today's video is going to be in a spreadsheet. A spreadsheet that has taken me over a year to prepare. I have often said the best resource is the trades themselves as proof of the success or failure of a recipe. And in this video I'm going to go through exactly what that means by showing a year's worth of trades. I've often been asked how a simple $11 position size can be profitable. Well, by the end of this video, I hope to demonstrate exactly how that happens and how averaging is a very profitable and lucrative approach while mitigating risk. My maximum budget never exceeds $1,200, and I always try to keep my exposure limited to $300, or 1/4 of my budget. This approach allows me to do that through a wide variety of techniques, including the recipes that I use. Now, next year may be just as profitable as this year. I don't know. But this shows you exactly how the process works on a long term, how it can be sustainable, and how you can achieve a reasonable consistency within a reasonable level of risk. So as you can see in my spreadsheet, I've got the asset, the date it was bought, the date it was sold, the price it was bought at, the price it was sold at, and whether or not I gained or lost in that asset. Now these values are in USD, since that is my preferred currency. BNB I typically reserved for fees and didn't really trade it. So you'll see a lot of BNB as losses because they paid for the fees of my exchange. So let's go through and start scrolling this spreadsheet. Very simple and easy process. And to help get part of this prepared, I used CryptoTrader.tax, although there are many different packages available. This information was taken from my exchange and illustrates exactly how the process needs to work. So, small trades. As you can see, profits and losses or gains and losses. Remember what I've said. No recipe is 100% successful. You are going to take losses. There's simply no way around that. Sometimes you get lucky and get big gains. Sometimes you don't get so lucky and the market turns against you. That is the reality of the market. And this is the kind of stuff that you need to keep track of for taxes. So, as you can see, some of these do pretty well, some don't. Here I actually made $1. Now, a lot of people will scoff at this amount of change, and that's really what this is, change. But that's the point. Change over the course of a year adds up significantly, as you will see when we get to the bottom, and I've ran a tabulation on this column. don't be surprised at how quickly change adds up. The other thing that stands out in this table is just how many trades have taken place over the course of a year. That's the advantage to automated trading. It's also a disadvantage if you're not prepared for it, in that it can easily get out of hand and away from you very quickly. So, as you can see, here's a couple of really nice profits. These are rarities. These don't take place very often. But when they do, they're nice to see. Okay, let's get to the end of January. This is a nice little bump for just holding it. Okay, so let's see. End of January. Okay, this picked up. As you can see, some of these were held for quite a while. And notice there are some gaps in the dates. Unfortunately, my exchange hasn't figured out how to do dating correctly. But that's neither here nor there. What is appropriate, purchased here, sold here, nice little profit. But $115 doesn't necessarily justify the fact that I had to hold it for 4 months. Again, that gets to the reality of your position size versus your time frame. Here's another example. Held for 2 months and yet only $47. Not even enough to genuinely break even for my fees. By the time I figure the cost of what I have to pay for my monthly subscriptions for the trading platform. So these demonstrate just how easily you could win the trade but still lose by your break-even point. Let's keep going. The dates are messed up as usual, but you'll see nonetheless still quite a few good trades, but not enough to break even. And that really is the whole crux of the matter. When you trade, and this is why I prefer small prices, I can make up the difference over an aggregated time frame, a small trades that are quick, than I can with trades that might take several months. 5 months for a trade for only a $90 profit is just not making money. The fees alone would eat that alive. Okay, so let's keep going. See if we come across any other unique surprises. But as you can see, the position sizes really don't get that large. And yet they do incredibly well for the profiting. Again, looking at the balances, you can see holding and trading fees. Okay, let's keep going. Let's get down deeper into this. And there are a lot of trades here. And it just keeps going and going and going. But always bear in mind the small amounts. These small amounts may not seem like much, but when we do finally get to the bottom, you'll see they really do add up. Roughly speaking, I did about 200 trades a month, or thereabouts. About 250 in some cases. All pennies. Some of these are literally just like 3 pennies and change. Of course, a couple of nice ones, but mostly pennies. As you can see, not a lot here in terms of any, quote, substantial money. This one was a break even. This one was a whole 26 cents. 3 cents. That's it. And you can see some of these, like here to here, this took 2 hours. So 66 cents for a 2-hour trade. Not bad. But it makes the price worthwhile. And that's why small amounts on small time frames are beneficial. We're already up to 1,600 trades. Of course, here's a big loss. This one hurt. But again, that goes with the territory. Understanding your risks. Now, ironically, even with this loss, and you'll see there's quite a few in a row here where it just didn't do well at all. And up here, altogether, this is quite a significant and substantial loss for this asset. Here's a nice juicy little profit. Same here, nice tiny little profit. Okay, let's keep going. Well, we're down to October. Here's a nice little profit, and here's a nice little profit. So profits and losses, both together. Okay, we're finally into November. 2,300 trades later, and we're still going. And we are soon to be getting near the end. And we are at the end. 2,718 trades. And I made a total profit of $1,343 and change, using only a $1,200 budget with an average exposure of only $300. So you can either say I gained my original capital back 100%, or based upon my exposure, I made literally 4 times my budget. So, small trades. aggregated trades. Are they worth it? Yes, absolutely. They are one of the best tools you have for mitigating risk. A good recipe can help drive this. A bad recipe can cause losses. Yes, it can get away from you very quickly. When I did my own audit, I didn't really think I did this many trades. But as you can see from the actual audit, I really did a lot of trades. That's the benefit to automated trading and it running 24/7. Even when you're not watching it, it's looking for opportunities. It's buying and selling, making wins and making losses. And hopefully at the end of the day, the recipe you've chosen will make more wins than losses. In my case, I did. I made back my entire budget. This is just one of many potential examples that exist in the real world of sustainable trading. Risk mitigation cannot be underscored as how important it is. Understanding and letting the algorithm function appropriately to the level of your trading is also important. Patience in setting this up and testing is critical because as you can see, once you set this loose into the world, it can do quite a bit very quickly. It can go very good or it can go very bad. If you've done everything properly and you've made a very close and considerate choice of your decisions, you will be rewarded with profit. If you try to rush, if you try to take shortcuts, if you don't study the assets you are trading and understand their unique market characteristics and dynamics, you will lose a lot of money. Trading is a science. It is a science of mathematics and algorithms. It is a science of understanding and learning. Take your time and trade safely, and you will be rewarded appropriately. Taking unnecessary risks, overextending your budget, are all recipes for disaster. So as you can see, here are what I made last year. Using only $11 with a maximum budget of $1,200 and an average exposure of $300. Not bad. Until next time.